Uh,
Good morning, everybody. It is Friday, and we are talking about stocks about 30 minutes before the market is going to open. I am joined by Daryl. How you doing, Daryl?
Doing wonderful, Victor. It's good to be here. Hello, everyone.
We've had a market that just doesn't want to go higher most days, and today it's kind of peeking into the green, but yesterday it landed in the red, and some stocks just getting beat up. Apple had a terrible day yesterday, but you know what? The pain's been going around. I think sell-offs have been an equal opportunity trend. Some stocks have been going higher, like in consumer staples, but speaking for my portfolio, stocks like Meta have been, kind of beat up. Uber's been beat up on a couple of days. I mean, it seems like the stock market's favorite punching bag has been software applications, and this thing's getting smaller and smaller. And Amazon's been on a sell-off for a while. And we wanted to begin by talking a little bit about where we're at with the market, but more importantly, just, two perspectives. I'm a long-term investor in stocks, and I invest in businesses. I invest in companies that I really believe in. Most of my investments, I have that type of mentality and I follow that methodology. As you see me value businesses, I'm looking, for example, at a 4-year forecast cash flows. I like to look down the road. I like to understand qualitatively what that business is about. Are they going to dominate in the future? Do they have a grasp of that future? And as we see down days, it's hard to ignore that, hey, my stocks are going down. This kind of stinks. We just had the Super Bowl this past Sunday, right? So if your team's down by 2 touchdowns, but you know your team's good, it still doesn't feel good to be down by 2 touchdowns. You're like, geez, man, we gotta score a touchdown. We need our defense to kind of, you know, stop the other team. So I get that, the sell-off in stocks is not fun, but I'm going to flip it on you and say that some of the best investments I've made is when the stock market has been very cruel to participants. For example, we had not too long ago, this one should be in everyone's memory, which is Google. Now, Google was being counted out by the market and most participants that, hey, OpenAI is really going to, change Google's value. It's going to change how people search. Google doesn't have as great of an AI app, and it was being counted out. It was falling behind the Magnificent Seven stocks, and I saw it as an opportunity. Now, I continue to say that. I hope that many of you heard me say that a year ago, year and a half ago. And at times I feel like, man, I got to be careful not to be a little too convicted on something or committed to something because I might sound crazy. Might sound like, man, that guy lost it. Um, but on this one here, I tried to really just state my thesis on Google, which was it's a terrific business. It's a collection of some of the most talented people in the technology industry. And I continued to bet on Google. Wasn't fun to see the stock price go down. Wasn't fun to see everybody else just taking off and going doing great. Then the market realized, I guess, it cut over to my side of the boat, so to speak. And Google's up more than 100%. And that's over less than a year. Okay. Long-term investing, it starts with, for my methodology, it starts with buying a business that I would love to have. Okay, that's a really good business. UPS, really good business. Target, really good business at the right price, right? For that price, I'll buy it. and then tracking to see if the story, the thesis that I have on that company continues to be correct by looking at the financial statements, not looking at the stock price. Stock price is a market creation. Some investors love gold and they bid up gold. I owned one piece of gold. Here it is. It's my wedding ring. Other than that, I have no real use for gold. Some people love gold, so it drives up the price. And stocks, to some extent, have that type of effect. Is some investors love a stock and they bid it up. Let's think about Micron or SanDisk. Those things just been going crazy. So just a reminder, as we have these tough days, they're not fun. I'm not saying it is fun. I'm just sharing with you that some of the best opportunities come when market conditions are probably the least comfortable, because everybody's getting out when it's uncomfortable, and those that remain and continue to buy in are buying at very discounted prices. We see it through, and then we look back and we realize we'd made the right decision. For example, on an Alphabet, Meta. I took Netflix and I tripled my money, got out. Lam Research. I mean, I can go down the list and say, I bought them when things were really ugly, bad, terrible, and it was a great idea. We got to do our homework. When things are tough, it's a good motivator to go do our research. Make sure we crossed all our T's, dotted all our I's, and we really understand the business. And if we really do believe in that business, in my case, I continue to buy. I've been buying stocks this week like crazy. So that's a long-term mindset. But I really appreciate having a short-term performance measure, because in the perfect world, I love winning now and I love winning long-term. So with that, I wanted to turn it over to Daryl, who has a really good perspective on how to achieve maybe short-term performance, or maybe some ideas, angles as to where you can get performance in the near term.
Yeah, especially if you're uncomfortable about your portfolio. There are things that are working, so not everything is going down. If the market's going down, there is always some opportunities that you can attach yourself to. Some of the ones that I'm going to look at, I've actually owned for 5 years. I'm also a long term investor, but I've been retired for 5 years living out of my portfolio. And the last thing I want to see is my portfolio lose 20 or 30%. I cannot afford to do that. If you're 10 years away from retirement, you can afford that because the market can recover. When you're already there, you cannot afford to do that. I guarantee you. Sequence withdrawals will kill you if you're living out of your portfolio. So I try to blend a little bit of this growth like Victor's talking about. I also believe in Google. I believe in Amazon, but I don't have them so overweighted in my portfolio that I have a 20% loss, because I cannot afford to do that as a retired investor. So your perspective will change a bit once you pull the plug and you're not getting a paycheck anymore. So this is an opportunity. I'm going to start off with the big market view first. So the S&P has been traveling sideways, where we closed below the 50-day moving average yesterday. It's been trading sideways, but there have been a lot of stocks that have taken a big hit. So how can the S&P be going sideways when there are some big names that are down 20, 30, 40%? Let's go take a look at that, because I have some charts that'll help us. I want to take a look at this put call ratio. Can you see that it's moving higher? People are getting a little bit frightened at the moment, and they are buying insurance. They're buying puts on their portfolio for a market pullback. So keep that in mind. And then one thing you can look at is when it peaks out, are you at a market bottom? Are you near a market bottom? Let's go back and look. So here we had a little bit of peak. It looks like we were about 3 days from a bottom. Here we had a peak. We were already at a bottom. Here we had a peak. We were already at a bottom. They actually missed it on this one because it was going up. The bottom was 2 or 3 days before. Here it peaked. We were already probably within a week of a bottom. We were within 1 day of a bottom. We were within 1 or 2 days as a bottom. That's why I share this with you, and this is why I watch this nearly every day. This tells me what the market is going to be doing and where we are, if we're at a bottom or a top. So that's the first one. The next one is, let's look at some offense versus defense. So once again, the S&P is going sideways. We're looking at offense. We're looking at the QQQ, high growth, compared to the S&P 500, which also has some growth, but it also has some value. The QQQ in relation to the S&P 500 is underperforming. So growth, which peaked out in the 3rd of November and started declining, this was a warning sign 2 months ago, 2.5 months ago, that something was in the mix in the market that was going to be driving high growth lower. Here it is. Let's look at discretionary versus staples. Same exact trend, same exact date. Let me get rid of those. Let's look at this one. This is large cap growth to large cap value. This one peaked out in August. And there's the trend. So we've had months of red flags here. Here's mid cap growth to mid cap value. Looks like we peaked out somewhere in June, maybe July. Another red flag. Small cap growth, small cap value. We peaked out on the 17th of October. Another red flag. Months worth of red flags. And technology and utilities. This one I don't use that terribly often. Let's go to one more, because I know I bore you guys with these charts, but they tell a story. S&P traveling sideways. Look at the XLY compared to the XLP. So we went back all the way to November. We started getting a red flag. XLY basically traveling sideways. The correlation is low. The only thing that's keeping the S&P 500 afloat at this point in time are staples. So back in November, we started getting a signal that staples were going to be what was going to be keeping the market afloat. Okay, and then I'm gonna look at a couple different scans. So I want to look at this one first because I saw um, post in the Discord that said, my portfolio's gone down every day, and other people are saying it's not that bad. So what are they investing in? This is 107 companies that belong to the New York Stock Exchange or the NASDAQ, where they are at a 65-day high. They're above a $5 billion market cap. It's not an ETF. And the technical rank, which is specific to stock charts, is above 60. And that means you're in a green indication. Here's the scooter ranking. Let's just quickly take a look at these charts. So Ambev is up. That's a dollar stock or penny stock. ADM 65-day high. AES 65-day high. AEP 65-day high and going higher. AGCO Corp at a high and going higher. So you can find opportunities of things that are going up in this market that is flat to going down. Now let's flip over and look at what's not working. So this is stuff that's hitting 65-day lows. Agilent, I don't know what company, AECOM, Accenture, ADP, Autodesk, ADT, Affirm, they're just not working right now. So if you're overweight these kinds of stocks, your portfolio is going to underperform. Doesn't mean they're not good companies, although the scooter technical rank says they got some problems. We'd have to go out and look at these. I know Amazon's on the list too. Great company. Technicals are horrible right now. So if you're really overweight that, and maybe you want to be, maybe you don't care if it's down 30%. I can't afford to do that. So I don't overweight Amazon, although I own Amazon. I believe it's a great company. So if you're not able to sleep at night, maybe you have too much Amazon in your portfolio, even though in 5 years it's going to surpass the prices that it's trading at today, in my opinion. So got to keep the big picture in mind. This is a chess game, not a checkers game, in my opinion.
Yeah, and I really appreciate your comments. And this is coming, guys and gals, from a retired investor. So he's not theorizing. He's living it. Okay, he's depending on his portfolio to pay for his standard living. So I really respect that, and I think those are good words spoken. Good stuff. So that's a good way to open, and just remember long-term mission. The market's going to do some strange things at times. Over the last month, Amazon's down, Microsoft's down. These are powerhouses, but the market just doesn't want to buy them. It's been selling off software, and it's been going to those areas that were just noted as areas of safety. But we're going to keep our long-term mission in mind, and we're going to start getting in some stocks. We're going to get kind of the juices flowing with a couple of stocks that announced, and then a couple of stocks. I know Daryl wanted to look at Pulte Homes and Altria. If you wouldn't mind, let's start with Altria. That's one that I kind of can get my head around. And Altria is a company that has tobacco products, and this stock has been doing well. I mean, if you consider you're getting paid a really high dividend and the stock goes up, especially if you bought here in the 2023 era, I mean, you've got a really good investment on your hands. Performs from an appreciation perspective, and the income that comes out of it is really, really high. If we look at their financials, not a lot of growth. There hasn't been growth in this space. Let's take a look at the profitability growth, see how that's been looking. So earnings per share growth looked really good a couple of years ago. That's when it started to take off. We have had a setback here for 2025. So I'll be interested to see what Daryl's analysis looks like on this stock. These stocks, I mean, the tobacco products category, it's been around for hundreds of years. I don't know how long Altria has been around, but it's been around for a while. Analysts think it's a little expensive, and they're supposed to grow a little bit and expand their profitability. It's a low EP earnings per share number on the stock. So this is a pretty safe stock. Good economy, bad economy. These tend to do well. I don't know that I have a valuation on. I'll check on it, but let me kick it over to Daryl to take a look at the charts on Altria.
Well, let's take a look at Fastgrass first because it's undervalued compared to its fair value based on its earnings growth. We have an EPS yield of 8.1, 6.5 is considered good value, and this is at 8. They pay the dividend at 6%. And the reason I want to show this one, let's go see where I have my, I don't want to search my chart list. I want to search. Okay, I don't have, I have it in my weekly chart review. The reason I bring this particular one up is we have a cup with handle. You've heard me talk about those before. So basically on February the 5th, based on this cup with handle right here, there's a 65% chance that this is running to between 72.5 and 73. We're currently trading at 67. So if you're looking for opportunities to offset some of the turmoil that's going in some of the other areas, this is one where there is an opportunity. I've owned Altria for quite a while, since 2021. You notice that almost all of my trades are green. It depends on when you buy it. I think, I don't know what price you were pointing out there, but I'm in at 45. They paid $14,000 worth of dividends over this time period. So my total return is 37, 15% annualized for my current investment because I have sold out of some shares. I'm almost up 100% on this. 40% annualized return on a boring staple stock. So
making money is not boring, but continue on.
Yeah, but the stock is. Nobody talks about Altria. And, I made 30 grand on this investment. So I've traded it total of 27 times. My average win is $1,300. I try to limit my losses. So on my 4 losses, I've lost $287. Gives me an 89% win rate and a gain-loss ratio of 4.5 to 1. So it's a boring stock. Nobody ever talks about it. Nobody ever asks about it. And here it is in a retired guy's portfolio that is at all-time highs today or yesterday.
And, I've covered Altria, and let me show you my valuation. It's a discounted stock, 20% discount. It's a it's a cash flow machine. It's a product that the market knows what it is. People pay for it, and there might even be a little bit of growth here or there. I know that vaping's become kind of a big thing, and that's kind of a area of growth for them. But the long and the short of it is you're being paid income, and it's a discounted stock in my book. I don't know where the analysts were getting their numbers, but these are my numbers that they're really taking very modest growth rates, 4% in the next 4 years, 3% long-term growth rate on that cash. I am using a high PE. Maybe I could trim that back. I know the market would give it like a 12. And I get that. I get the market. This is considered kind of a undesirable stock because of the nature of their product to some.
Yep. That's
And
something you have to keep in mind too.
I think it's not marketable to those, but I'm an owner of Chevron. Okay. Now, hopefully I don't upset anybody that's watching. And the oil business is the oil business. Oil gets consumed and it creates pollution. That's a fact. Chevron gave me a job when I graduated from college. They're very instrumental in my career, and I thought it was a great place to work. And oil is a necessity. There are some people that don't like oil companies. Okay, everybody's got a right to their opinion. I invest in oil companies, period. And they at times it's been a great investment. A couple of years ago, it stopped being a great investment. This year it's having an okay year. But aside from that, I'm trying to invest to create value for myself and my family. And investing in oil companies is all right in my book. Investing in Altria, it should be the investor's, mission. If they want to include it, no big deal to me. But I know some people would shy away from it. As an investor, I think we do have to be realistic that some people might shy away from it. So that's Altria. Covered Altria real quick. So the market did open. Let's take a look at what it's doing. It's opening in the red. Man. Now, here's something that I'll reflect on. Is 3 months ago, about 3 months ago, I was like, man, stocks are just too expensive. Stocks are too expensive. Stocks are expensive. You heard me say that, right? And now I'm not saying that. There's some opportunities out there. Here or there's some good looking stocks now. And it's been that rotation, out of big tech and into other places. And it's opened up opportunity, I think. So let's do something with it. All right, so we'll just keep an eye on it and see what things are selling off. Looks like big banks are having a bad day. Google giving up some of those gains. Meta giving up some gains. Walmart giving up some gains, but looks like healthcare is having a decent day. All right. So we have some requests. Let's take a look at some of these requests here. So we looked at Altria. We're going to open up with SPGI, and we've got, let me share with you the ones that I've noted. So we got SPGI, INTU into it, Pinterest, Upstart, PHM is coming. That's a Daryl request. And my list is simple. Airbnb, Instacart are going to be stocks that if we have time, we'll take a look at. Those announced yesterday, and their stocks are on the move. All right, so S&P Global. Wow, look at that chart. Whoa, you're going to have your hands full on this one, Daryl. Market cap, $120 billion. It's under some pressure, pays a dividend. Analysts think it's highly discounted. Let's take a look at the financials. What's been happening with this business? It's been a consistent grower. And a lot of their their consistent revenue is the S&P 500, I believe, is their product. If somebody wants to use that definition or interpretation, they have to pay S&P. Quarterly. So quarterly doesn't look that bad. Thought I was going to see some type of contraction. So something else is causing that big sell-off. Maybe they guided poorly. And I know that it was Anderson that asked about this. I don't know if you got some details on that, Anderson, of what's causing that big sell-off. So that's the quarterly
it's the
there.
AI threat. It's the AI threat.
Huh. Okay. AI is threatening everything, huh?
They provide a lot of financial analysis.
I can understand that. Yeah. Yeah. Cash flow looks good. I like when a company, see how it's growing cash flows. That's what I want to see. That looks really good. Margins are excellent. Profit margin. Okay. Forecast. So these are analysts looking at the business, and it's going to consistently grow. 2026 are going to grow nicely, 9.57, and then 7.27. This is kind of a little low in 28, and the profit is going to expand. So good numbers, consistent numbers. Now this whole AI threat, it's been smashing software, and we're going to talk about Intuit in a bit. And I don't know when it's going to end. It's like, I don't think that AI is going to completely disrupt software companies. I've worked at software companies for a long time. I know AI fairly well. I understand what it does. I use it quite a bit. And, you know, like S&P Global, when you conduct research or you kind of provide information, human beings decided, hey, this is a collection of research items that really investors want to see. Now, is AI just going to be kind of a copycat and kind of grab it and then produce it? I don't know. It's not my field of expertise, by the way. I know enough to kind of understand what they do, but it's not my expertise. Software is an expertise I have. So I don't know. I don't know if the AI disruption is actually going to happen, but I do have a valuation on this company, I believe. Before I jump to my valuation, let me kick it over to Daryl, see what he thinks of the company.
We'll start off with the 5-year chart. I tested that back in 2021, tested it again in 2022, 23, broke out above it, broke down below it. So I like to look at these longer term, just where does it kind of settle in? So we broke above it in 2023 and haven't really looked back until today or maybe this week. So let's just step into 1 year now that we know why that particular line is there. Slowly here, one year, so I'll save it there. So we did come down and touch that line, man, to the penny. So this is a line over 5 years. Everybody forgot about it for the last 2 years, and here we are. Yesterday we tested it to the penny. So it was a relevant price that it came and tested yesterday. So that's always important to keep in mind. These things can run for quite a while, but they tend to quiesce at some point back to their, I don't know what price you want to call this, kind of a quiescent kind of a price. So their 200-day has been pretty flat for months after it rising, so it's trying to begin a decline. It looks like it's still flat. The 21-day is turned down pretty sharply. The 5-day, it's trading below the 5-day at the moment, which is we're actively trading at this point. And the 50-day broke down below the 200-day. We are very oversold. We can stay that way for a while. So there's 2 weeks we stayed oversold. We're about 2 weeks into this trading place where we're oversold. We got a sell signal on the 16th of January that appears to be getting worse and worse and worse. Today and yesterday looks to be a little bit better, but these two lines are still pretty far apart. I don't know if we found a bottom in this particular cycle yet, but let's take a look at the weekly. They're just now getting into oversold on the weekly. Looks like we got a sell signal about the same time, the 26th of January. We're starting to get some distribution. How long that lasts, I do not know. And money flow is sitting neutral. So, depending on how long this AI talk, whether you believe it or not, I think you have some time here to kind of wait and let this thing settle out. This could be basically a head fake because these two indicators right here show some pretty sharp and decisive sell-off in this particular holding. Yesterday we did get a little bit of a bump, but we're at let's go out to a couple years. So we are at a low that we have not seen since the 2024. So if it took this long to accumulate, my thinking, if I'm an investor and I want to jump into this, do I want to jump into this today because I see it jumping up? Or do I look out a little longer? It took a year to get here. Am I going to make a decision based on one day? For me, the answer would be no. I think you have some time on this one. I don't think this is over. These are very strong signals at the moment. That's my opinion on SPGI.
Thanks, Daryl. So I didn't have a valuation on this stock, so I'm kind of creating one. Wow, look at that. Cool. All right. So I just did the free cash flow forecast, and when I hit the share count, I got to a 1% premium, like right on the button. I'm growing cash flows by 7%, long term by 3.5. Now let's take a look at the earnings per share. Now, a stock like this, right now, is AI going to disrupt them? I think to some extent, yes, because maybe there is a few searches or a few requests for information that are taken away from this company. And that means that their growth they're going to have a hard time growing is potentially what's going to happen. So having said that, I think this one here, wow, look at that. Jeez. right on the button. Yeah, there just isn't enough there. I'm not seeing like, you know, how kind of what could potentially enable S&P to grow faster. I don't know. I don't think there's much out there. On the flip side, what can threaten S&P Global? Well, the AI thing I think is real, and I don't think it's going to put them out of business, but it's kind of like, well, but you're not going to grow much more because we're not seeing yet is there's going to be companies that take AI and then they create something new that we just didn't know was going to happen. And maybe there's going to be an AI app that does something like constructs an ETF and auto syncs the ETF, I don't know. We'll see. So for me, S&P Global would be a pass. Just not enough there. Even if everything like went their way, it's going to be a modest gainer. But if things don't go their way, judging from what's happened to software, holy smokes, you can lose 25, 35%, and then you don't have much. So that's my feeling on S&P Global. I'm going to put that on the watch list so we can just watch it, and this will be available to paid members who have access to the terminal, and they could take a look at this at their convenience. So bear with me here. I'm just going to put a placeholder and then I'll be back. All right. So let's take a look at that stock market. See if we're going to, wow, look at that. Google down, NVIDIA down. All the big guys are getting another haircut. Staples are down. Huh. Healthcare is really green. What's going on in healthcare, Daryl? Was there some news?
I don't know. I haven't seen any news on healthcare.
Weird. Okay. All right. All right. Well, it's a green spot. Okay, let's keep rolling here. We're going to go over Pinterest. FYI, Mike, the dividend investor guy, according to his chat, he's a pretty good checker player, but may need a little assistance on being a chess player. All right, so Pinterest. What's going on with Pinterest? Oh, man. So I've talked about Pinterest a few times over the last 12 months. And Pinterest is a cash flow, moderate growth company. And the market just hasn't got it to participate with Meta. I mean, Meta's down 12 months, but it's been a very good investment for the last 3 years. And I think it's going to really be a good investment going forward. Pinterest is kind of a small cap that is kind of out there in the corner. Their website's more image based, and I could understand that, hey, maybe AI is going to create these images and start creating all this eye candy that people love, because that's what the site's all about. Now, I don't use Pinterest. I don't want to stare at images all day long. But maybe some people do. I know Instagram's a little bit like that eye candy kind of feel. TikTok, I mean, I could handle TikTok or short form for a little while, but not much longer. These guys are down big. Look at it. Whew. This thing's been run over by a truck, and then a pack of cyclists ran it over. I mean, it's just been severely tortured. Oh man, not good. Their PE, forward PE, 8.5. Let's take a look at their growth. They're growing, folks, but let's look at the most recent quarter. They're growing. What the heck? So they're growing 15.79, 19. These are decent growth numbers. Okay. This is not like, I mean, we just looked at Altria. They grow 2%. They're flat. And the market's like, yeah, that's what they're supposed to do. These guys are like, oh yeah, AI is going to kill them. They keep growing. Yeah, but it's AI is going to kill them. It hasn't killed them yet. So that looks good. Look at this. Look at this cash flow. Okay, cash flow is increasing. That looks good. So on paper, this thing should be doing better. Free cash flow margin's good. It's profitable. Let's take a look at the forecast. We have 26 analysts. Okay, 26, not 6, 26. And they think this thing's a 141% discounted stock. That's a good discount. That's a very good discount. And looking at the forecast, no AI disruption forecasted over the next 3 years. P ratio not anywhere near where it should be. If it's going to be a viable business, these guys should be trading higher. Now, these guys are not like Snapchat. Snapchat, they kind of, shot their own, they shot themselves in the foot most of the time, where they would have terrible numbers and then the stock would sell off. But these guys have decent numbers, and their valuation, I don't know that I'm going to be 142% discounted, but I think I have a discount on them. I'm 82% discount. I'm more conservative. This thing's so discounted. It's like, oh my God. They have all cash on the balance sheet, no debt. I mean, I just don't know what to tell you on Pinterest, but the market, it just is we're in a year where it believes, or I should say, a population of investors believe AI is going to hurt certain industries. And I think they've looked at Pinterest and said, AI is going to hurt Pinterest. And it's almost like, hey, nobody wants to touch it. Is it worth the gamble? I don't know. Let me kick it over to Daryl, because I don't know, but maybe he knows.
So they're at lows that we haven't seen since the pandemic lows. So they're trading at 13. We got down to 10 at the pandemic low. We're not in a pandemic today, so I'm going to say this looks like a pretty ugly chart. Got a 200-day that's declining. Got a 50-day that's declining. 21-day that's declining. 5-day that's declining. It is oversold. Been oversold for a couple of weeks. We've got a sell signal on the PPO since the end of January. Distribution. Let's go out to 3 years. Distribution is at an all-time high, or you can look at it that the accumulation is at an all-time low. Money flow is negative and getting worse. So I wouldn't touch this one. This is very, very ugly chart. No signals saying that it's anywhere near a buy at this point.
Yeah. And I mean, I look at the user experience on Pinterest, and let's go there real quick. See if, so this is why I don't touch. I did invest in it for a short period of time and then got out because I'm just like, man, I just don't get it. So as I look at the experience on Pinterest, it's very image driven. And I think that it could be an AI, vulnerable company, because this is like AI does this. This is one of the things that it's been doing quite well. And I'd rather invest in Reddit, because Reddit, the user experience is very it's deep in thought, it's deep in engagement. People are showing up because of that human interaction. Is AI going to disrupt Reddit? No, because you have some pretty strong voices at Reddit that have a lot of knowledge, and some of the threads that I've seen on Reddit are really good. Like, if you want to learn about bond investing, go to Reddit and read through those threads. It's like PhD level. It's really good. AI is not going to touch that. But this imagery stuff where you have, part of a Lamborghini or Eddie Van Halen, going through the air, this is like AI all the way. So I could understand that, yeah, you look at this, yep, it could get destroyed. So that's where I'm at with Pinterest. It is too unusual for me to put my hard-earned money into. Let's move on. Let's talk about Pulte. Let's talk about home building. It's going up. And over the last couple of months, this has done quite well. 17% higher, pays a small dividend. Some things, might be helping home builders. I don't invest in home builders all that often. The last one I invested in was in Lennar, and it's been a little while. But this one would be interesting to take a look at. Coming out at 22, I mean, this thing really took off, but over the 1 year, still good. Yeah, very good. Growth, no growth for 2025. Home builders don't have these smooth growth numbers, and this one is showing up like I would expect a home builder would show up. Looking at what analysts think about this stock, they think it's priced a little too high, and their forecast is for a contraction to happen in 2026. And judging from, I think, the home sales data that came out, there was kind of a contraction in the number of units sold. So maybe they're on to something there. But 2027, they expect some growth, and 2028, a lot of growth. So, interesting. What do you got on the charts for Pulte, Daryl?
Okay, so home building has been struggling overall. We have mortgage rates that are still high, but this one I heard about, took a look at, and once again we have a cup with handle, and here's the right rim of the cup, and we're getting a breakout today. That's the trigger to trigger this cup with handle. So if I take the price at the right rim, subtract the bottom, because this is a pretty lengthy base of 8 or 9 months. If I subtract the bottom and I add it to the price at the rim, I get a price target of $192. We're currently trading at 141. So there's a $50 upside on this one. One of the things that could come into play is there's some talk about home affordability and availability. If the government gets involved and helps with these entry-level homes, and Pulte would be a player in that, that gives some potential catalyst for this one to rise higher. Just based on a cup with handle, you have about a 65% chance of increased prices. So that's playing in your favor. And then if you want to play a little bit of chess, do you think that the government can push affordability and availability of entry-level homes? Pulte could be a winner.
Yeah. Good stuff. Thanks, Daryl. And while you have the screen, DJ wanted to know, is there a good entry price on Meta? And I'll let you get set up on Meta. We'll go to Meta and let me share my evaluation and then I'll kick it back to you. So Meta has seen a pretty substantial sell-off, and it was created because they're spending so much in the data center. 45% discount on Meta. What is impressive about Meta is they're spending giant amount of data, money, giant amount of capital in the data center, like massive. But they make so much money and generate so much cash that they still have a lot of positive free cash flow left over. It's like, wow. And they're trying to create AI. I think it's a really good idea for two fundamental pieces. If they weren't doing it, we saw Pinterest, right, getting smashed because there's an AI threat. Well, Meta is investing so that if AI does become this big monster, they have a monster of their own. Like, okay, we're going to have an AI monster. And if it doesn't become a monster, then you have the core business still doing great. So I support Meta's investment in AI. I have no problem with it. I think it's a good investment, and we'll see how it plays out. Now I'll kick it over to Daryl and see, what do you think would be a good entry price? Because the stock has been, sold off, and I'd be curious to hear what you have to say there.
Yeah, so it's it's trying to find its price right now. This looks like a little bit of price discovery here to me. They did have the gap down. We have tested, come back to that gap. We're trading a little bit below it now. We're trading below an 50-day that looks to be, could be rolling over. 21-day has already rolled over and it's trading below a 5-day moving average. But we're right around here where the market's looking for where the price should be. I have some longer term auto support resistance lines that they did touch in November. So that could be a value that they could trade down to. I think it's somewhat unlikely, but it could. We are getting a candle today that looks like it tried to sell off early in the morning and buyers stepped in. So it might have a little bit of support right here, which isn't too far from where I see the price discovery landing. We do have an RSI that is still above 40, but we did get a sell signal on the 9th of February. But actually, I think this anywhere right in here is a good entry point.
Excellent. So we have a new member. Welcome. And looks like, not sure how to say it, but here's the new member. Thanks for joining. Please get me your email address. My email is victorhinvesting@gmail. And the reason I want your email is so that I can give you access that you have as a member and get you all set up. But I really appreciate you becoming a member. And then on live streams, you can put stocks down. We'll take a look at them. So if there's a stock you'd like to look at, let us know. Thanks again. Dwayne, good to see you. And Dwayne, I think, is doubling down. What is that price? Can't see
He's
it.
asking about Meta. It's about where it's currently trading. So 645, I think anywhere in this 645. The other price that I mentioned that was down at the November lows is closer to 588.
Mm-hmm.
I'm not for sure it's going to get there again. I think right here is about where most of the price discovery is happening at the moment.
Excellent. Thanks. All right. So we're getting through the list. See what's going on. I could sip coffee and watch the heat map for just to kind of relax, kind of watching the ripples in the water of a pond to me. So healthcare is still doing well. I did notice a couple of stocks have been doing well. Coinbase is up a lot. Reddit's up a lot today. And looks like money's leaving staples, going to healthcare, going to utilities, going to industrials. And look at it, applied materials up 10%. I did a video for members on applied materials. Take a look at it. Did some deep research on them, and I think you'll find it interesting. CrowdStrike's up, Palantir's up, Microsoft's up a little bit. Cisco's down. I also created an Arista Networks video, a short for members. Take a look. Again, did the research on it. All right, let's keep moving. Got a list to tend to here. So let's go to Intuit. Hopefully I don't bring down the vibe of the session here, because Intuit has been a place where capital has gone to die. It's down 31%, and I laugh because I'm invested in Intuit. Okay, so I'm laughing at myself. I thought it was a really good opportunity because Intuit, I really like this business. For a long time, it's been really expensive to get into, and you see how historically we're at a price where we were there coming out of 2022, which was 2022 was a tough year for most stocks, especially technology stocks. So I got myself involved. I don't regret it. I think my research led me there. Analysts think it's 95% discounted. Pays a small dividend. It's a $110 billion market cap company. This company has excellent products. TurboTax isn't going anywhere. AI is just going to make it stronger. QuickBooks, it ain't going anywhere. AI is just going to make it stronger. And then they have these other products. They have like a MailChimp. Well, guess what AI is going to do to that product? And Intuit has been, they did a deal with OpenAI. So I haven't completed my taxes yet, but when I do, I'm probably going to see a bunch of AI agents that want to help me, and that should be good. And so, but these guys have just been getting smashed. And I'm going to add Reddit to the list here real quick. Financials. So they're growing, and they're growing quite well. The 21, 22, they had really good growth. And now we're seeing just good growth, 17%. This is a pretty good sized business, 19.4. And the desirability of this business is really high. 80% gross margins, 21% profit margin, free cash flow margin of 32.9. Those are good numbers. Good numbers. Real good numbers. I would buy a business like this. And it's going to continue to grow, according to analysts. That's why they have the stock so discounted. And a high margin business like this, it just should have a PE in the 20s. Okay. You're growing, you have high margins, you have high cash flow, you're in the 20s. Instead, it's in the teens until the world sorts out, is AI going to hurt? Is it going to help Intuit? Is it going to kill Intuit? What's it going to do to Intuit? What's it going to do? So 51% discount. Now, I'm just going to hunker down. somebody's wrong. I happen to still believe the market's wrong. The market just is overestimating how AI kind of is going to disrupt these guys. I think AI is going to make the experience of being a customer, a user of Intuit better. But I think Intuit can harness it and probably sell their product at a better price. And we'll see. Let me kick it over to Daryl. In the meantime, I'm going to ask Gemini if AI is going to kill Intuit, and we'll see what Gemini has to say after you're done, Daryl.
Okay, so we looked at this one before. I had this auto support resistance line right here because it had tested it a couple times there and a couple times or once here. But then we broken down below that. So I need to add another one. And I can see that here we have at least 2 or 3 points connecting and here. So I will save this. And we'll step in just a little bit. I'm going to go maybe to just a couple of years. Well, maybe 3 years. Okay, maybe I need to stay out at 5 years. I want to keep that second auto support resistance line in view. So I think this is probably our next target. I don't see a whole bunch of resistance looking over here to the left. There may be a little support around 370, but I think 350 is going to be more in line. So that's what I'm basing my thinking on. Let's go into the 1 year because we did have a bearish negative divergence, and I've talked about these many times. It's one of the first things I look at or try to find on charts. Here we had a series of higher highs. We got high, we got higher, but the momentum was stalling out. When that happens, it may be a week, it may be a month, it may be 2 months, but it's finally going to break down a large majority of the time. Not always, but a large majority of the time you can suspect that you're going to have a price breakdown. This occurred on both the RSI and the PPO. Sometimes you'll get it on one or the other, but here we have both telling us that we had a bearish negative divergence in play. Once again, when I step out to maybe a couple of years, we are at accumulation or distribution that is at the lowest it's been since December of 2023. Okay, so this is clearly in distribution at the moment. So I think this line is in play. We've had a sell signal since the 12th of January. It is very oversold and has been very oversold for about a month's worth of trading. These don't seem to be slowing down any, and money flow is at a pretty negative point. If we look at this on the weekly view, and we've been on a sell signal basically since the 21st of July in the weekly view. Money flow is neutral. And we're just now getting into oversold on the weekly view. So this one still has some downward pressure, in my opinion.
Man, the pain continues. So I asked AI, is AI going to disrupt the Intuit business? This is Gemini, and it said that Intuit is disrupting itself. It's changing from being a software program to an AI experience platform, and really changing how the user is going to interact with the Intuit experience, I guess, the code. And that's a really good idea on Intuit's behalf, which is kind of make it so that if a new player comes into the market with an agentic AI experience, it'd be a Me Too player, and users would be like, no, I'm going to stay with Intuit because I've been with them for a long time, as opposed to, hey, I'm going to go to that new guy because Intuit doesn't have this feature function experience. So I think that's the right thing to do. And Gemini, by the way, provided a really good answer. Gemini's been really good. I've been asking it some really good. Look at this. Look at this answer. Nice job. So I think Intuit is. So here's a question. This is kind of a. It's a big question, but maybe we can answer it quickly. I happen to believe that I'm a dollar cost average investor, and part of it is that I've gotten to know the business. In some cases I've known it for 20 years, and I know when to buy and at what certain points I want to add more capital, especially like if I see their earnings really shaping the company the right way, I can add, I could take away, and so forth. And some investors are like, no, it's better to go, big purchase one time or a couple of times. Where do you stand on? Do you dollar cost average in, or do you do lump sum investing?
I typically DCA, but I don't DCA blindly. I may go months without adding if I think the charts are telling me one thing or the other. And if the chart looks like it's going to be moving higher, I might DCA a little aggressively over a couple of week period. I don't DCA blindly. It's not like I just blindly invest every 2 weeks in the same companies. I don't do that.
Yeah, I don't do that either. And Reddit's an example where their latest financials from their last earnings, it's a really good company. So I'm now buying into Reddit. I've been buying into Reddit, and it's a really good time, in my opinion, to buy into Reddit. It's a stock that came up, so we can quickly pivot to Reddit. Reddit, I think, is going higher. It just announced earnings on the 5th. So we are a day and a week from that date. What's it done in that time? So the market over the last 5 trading days, looks like Stock Analysis thinking about it. This stock is down over the 12 months, but you'll see the chart's really wild on Reddit. And over the last 5 days, it's down. It really sold off. Their earnings were excellent. Let's take a look at them together. 69% growth. Okay. Margins, 91%. Profit margin, 24, 31. These are really good fundamentals on a 70% growth company. I looked at the report, the market sold it off, and I'm like, man, I don't get it, stock market. And I can understand there being kind of just a general, hey, everybody's guilty until proven innocent on AI is going to disrupt them all. And you got to prove me that it's not. And I know that Reddit doesn't fit the perfect mold of AI because, again, users of Reddit go there because the engagement is so deep. Like in some cases, it's and you can tell human interaction. And I think if AI started getting in there and having those polished answers that really you can tell it's AI, it just get pointed out. So I think the engagement's going to continue on Reddit, and it actually make it more valuable, as they've shown that advertisers want to advertise on Reddit. So I'm good with the numbers, really good with the numbers, and glad to see it go higher today. It is a stock that I think is going to be a fantastic business. Buying at the right times is key. See how I was buying here. I didn't buy here. I didn't buy here. I didn't buy here. I wasn't buying here. I bought here. Now I'm buying again. And it's the sector that I'm most heavily invested in. And I didn't want to buy any more because I'm so big into Meta and Google, but I just couldn't resist. The market just, I think, out of its mind. And what are analysts thinking on this stock? Analyst, 63% discount. So what's going to happen with Reddit? I don't know. What do you think about Reddit, Daryl?
Well, the 21-day crossed below the 200, which is still increasing. The 50-day is decreasing. This dotted line here was a green line indicating that it was support. I just changed it to a red because it is broken below that in a sustainable fashion. It's still maybe going up today, but 5-day moving average is still heading down. So what I would do in this case is just use my crosshairs here to look at where the next level of support would be. It looks like we have support around 120. And that's been tested at least 4 times, so that seems pretty reasonable support level. And that's where I would be looking and waiting if I didn't own this and wanted to get into it, because I tend to be pretty patient. I don't have to buy it today. So I'd wait for it to come down to what I see as valid support. But I don't, at this point, I don't think it's going probably much below that level right there. So I might even consider, it's a pretty big chunk of change to sell a put on, but if I really believed in the company, it'd be a $12,000 hold on some money for a while, but that's where I would buy the put if the premium was good enough.
Mm-hmm. Yep. All right. So we're going to move on to Upstart, and Ben 10 has joined the stream. Looks like CDLR and WDS.
Victor, I need to step away for just 2 minutes.
Sure. Okay, so Upstart has been under pressure since announcing their earnings. And this stock here, I can understand that there's a little loss of enthusiasm because the growth rate's going to, kind of stair step down, but it's still going to be positive. And there are some market conditions that I think could help Upstart, lower interest rates, but Upstart it's not like they're depending on net interest margin. They're making their money on transaction based. They charge basically 3%, and then they collect that 3% over the next 4 to 6 weeks. And I think that model has its advantages versus revolving credit or long-term loans. And these guys, I think, if they can continue to grow, I think this is a really discounted stock. The financials look good, but when we look at their growth, I can understand investors going, whoa, look, the percentage is dropping too quickly. That might be one of the concerns. Analysts think it's discounted, and the forecast does show that 2025 was a really good growth year, and then it slowed down, but still positive, and the profits are really going up. bringing down the PE ratio to 12.6. So when's this thing gonna move higher? I think it's discounted, but I just can't answer that. I think investors are concerned about it. It's discounted nicely, and the economy's doing okay. I don't think it's doing great, but I think it's doing okay. And I think Upstart's going to continue to participate because as things get more expensive, whether it be appliances, somebody has a stove stop working, they want to replace it. Upstart could be that buy now, pay later solution for them. So there's a lot of things that could help the Upstart stock. Just the market doesn't like it. When's it going to start liking it? It liked it a lot in the COVID kind of era. So, So Daryl, would you be able to look at Upstart charts, or do you need a few minutes?
Sure. Let me just pull it up.
Sure.
Okay, here we have a longer term auto support resistance line that we have not been able to break out above. So this is over 5 years. So it couldn't break out above it in 24, 25, end of 2025, and it's been breaking down. So we'll go to 1 year, 200 days, been decreasing, leveled out for a couple of weeks and is now decreasing. So we're in a confirmed downtrend. Let me change my 20-day moving average to what we're used to seeing in this particular stream, just so they all look alike and I'm not changing colors and indicators on you. So the 21-day exponential, the only difference between the 20-day simple moving average and the exponential moving average, if you're familiar with that, is it gives preference to the most recent portion of the average. So 21 days is the simple moving average. You just add up the price of the last 20 days, closing price of the last 20 days, and you average it. And that's what the 20-day moving average would be. Exponential is weighted toward the most recent days, so it gives preference to recent price changes. So that's the only difference, but I want to stay consistent in this stream where they're all the same and I'm not changing indicators on you. So 21 days decreasing, the 5 days decreasing. Looks like they're trying to trade just a bit higher than where they closed yesterday. We are in an oversold condition. We've been on a sell signal since about the 16th of January. Looking at the distribution. Yeah, it looks like we're at the least amount of accumulation in 3 years. So people are moving out. They're not moving into this name. Money flow is very negative and getting worse.
This is a new business with a new model, right? And my conviction is not like 100% because it's like, it's a new model. It's a new way of doing business. Is it going to stick? It could. If it does, there's going to be some big good winners on the stock. But if it doesn't, the losses are going to be pretty bad. So, Upstart. All right. So, this is looking a little greener to me. That's good. I'm okay with the stock market being greener. Oh, look at that. We're close to, there we go. There we go. A little greener. Nice. All right. So let's take a look at, I think it's Cattler. CDLR. So this one here, let me refresh my memory. Cattler, together with its subs, engages in offshore wind.
You want to share, Victor?
Yeah, I should. So Cattler, together with its subs, engages in offshore wind farm installation operations and maintenance services in Denmark. I remember looking at it now. Yeah. And I've been looking into the solar stocks, and they've been doing really well. Now, solar, wind, different technologies, but they produce power. And these guys, they own the equipment to install these wind farms. I've also looked at a report, I think it was yesterday, that energy cost is going up here in the United States. And I think it's because there's more buyers of energy, especially these data centers. So I thought, man, how could this not be a good idea? But the market, let's take a look. Wow, look at that. That's what I get for thinking. I should have been buying instead of thinking. It's up nicely over the last couple months. We've covered this stock over the last 6 months. Yeah, it looked good then. Looks great now, but hindsight is 2020. This is a small cap, 2.28 billion. Man, I'm liking the shape of this. I'm going to put on my amateur technical analyst hat on, and then we'll hear from the expert in a few minutes. But I'm liking the way this is like looking. Forward PE 6.8, ridiculous. When did they announce? March 24th. They're going to announce on March 24th. So we're about we're a month away. Jeez, growth. And these guys are in the energy space. Man, I gotta put a little gold star next to this one. No analysts are covering it. This is a company in Denmark, so this is listed on the US exchange. I believe I did a valuation on them. Let's see if it's recent. Oh man, this thing's eating my heart out because, see, I reviewed this thing in September and I do remember it. And I'm like, man, this thing's got to be good. I mean, energy is getting cranked up on cost. These guys are putting in wind producing power. And I'm using an 11% discount rate because a lot of things can go wrong. So I'm seeing this still as a really positive idea. Let me kick it over to Daryl.
Yeah, so this is looking like a really powerful chart. 52-week high, trading above an upward sloping 5-day, 21-day, 50-day, 200. The 50-day crossed the 200 on February the 9th. We've been on a buy signal since the 28th of November. That was confirmed by an RSI being above 50 on the 2nd of December. Every time that it's pulled back slightly, it's kept a 50 on the RSI. That's usually a really good sign. So I would be careful just looking at this right here. It's early, but we're getting a higher high and we're not getting the same level of momentum. So what that would tell me is that it could run a lot higher, but we're probably, after this run, we're probably going to do a little bit of either profit taking or a slight pullback. So if you're going to enter, I would enter in lightly, have a tight stop loss, and let's see what these two momentum indicators tell us. I'm also seeing a lot of distribution right now for some reason. I don't quite understand that. Even though we're going higher, we did see a little bit of accumulation, maybe because it's a small cap. But right now, the last 2 or 3 days, we've actually been in distribution. Money flow is currently neutral. I'd wait for a little bit of a pullback or enter lightly and have a tight stop loss.
Okay. I'm updating my valuation. Okay. I don't know if I can wait, Daryl.
Yeah, let me you go ahead. I'm gonna look at the weekly chart and see. Yeah, we're still on a buy in the
Discounted.
weekly chart.
So this stock looked good in September. The big picture, are we going to stop using power in 2 years? No, we're going to be using more of it. How about in 10 years? A lot more. These data centers are getting like so big, and we are all getting more and more electricity driven products. I bought an EV November, and a lot of people are buying EVs. I don't know if in your area, these e-bikes are everywhere where I live. I was in New York City beginning of this week up until Wednesday. There's e-bikes everywhere. Well, they get plugged in every night. And e-bikes aren't a bad idea, by the way. I think it's a great idea, especially if you're taking a car off the road. Awesome. Well, most of the population lives near the shorefront because that's just where people ended up because they could get to waterways and so forth. And if you can put wind farms near where people are going to be consuming that power, how is it not a good idea? So man, I'm gonna have to nibble on this stock, Daryl.
Yeah, let me show you the weekly chart. It's a little more encouraging.
Yeah. I could use
so
a little encouragement.
Here we're looking at weekly data, which just kind of smooths out the day-to-day stuff. So we haven't even gotten to an overbought condition yet, but we still had a buy signal back at the middle of December, and that seems to be even getting stronger. So looking at the daily versus the weekly, I might go in a little bit heavier, but I would still have a pretty good stop loss on it because we are getting at the upper end of the RSI. We're going to be moving into overbought territory. We're no longer in neutral money flow on a weekly basis. We've actually pushed to the bullish side. So weekly looks a little bit more encouraging. That would lean me to investing a little heavier than I indicated on the daily chart.
All right. Daryl, you are speaking with an investor in CDLR. Just bought some shares. Yeah, man. You know, there's some stocks where everything's kind of lining up, big picture, fundamentals, like, and then I don't act because sometimes I get busy and sometimes I invest in something else. Then I come back to that stock and it sometimes it's a bitter pill to swallow. I'm like, man, I had everything figured out on that one. Why didn't I buy it? So cattle, I don't think the horse is just left the barn. Okay. If I act quickly, I can maybe jump on the horse's back and ride that horse, because the chart that I'm looking at, of course, I'm the amateur chart guy. Daryl's the guy. But I'm like, it had this pullback, and we looked at the stock here, it looked good. It had this pullback. And I think that pullback kind of scared me. I probably would have, if I was paying attention, I would have probably entered around here. I'm showing up a little late to the party, but I think the party is going to go for a while. 200% growth. God dang, man. I cannot find 200% growers every single day. And these guys are, I think they're going to be installing these things quite a bit, because the alternatives for energy, right, is everybody's crazy about nuclear. Man, that is, I think it could work. Not saying it can't, but it takes forever to build nuclear reactors, because you have to build them safely so that they don't emit radiation and kill and hurt people. And then the other alternatives, right? Everybody's like, oh, you're gonna buy turbines from GE Vernova, install them, and then burn natural gas. And it costs a lot of money to burn natural gas to create power. So that's an alternative. Okay, that's fine. But you have this wind, and if you have the technology that's good, wind has been around for a long time. Solar has been really working. Solar stocks have really been working. And now solar stocks would be one of those things where I was kind of not paying close enough attention, because some of the solar stocks have just been killing it and doing really well, like up 100%. So, all right, CDLR. We'll see how that plays out. I'm a dollar cost average guy, so I'm not betting the farm. Let's go over to WDS. Woodside Energy. Bless you. Woodside Energy. What do these guys do? Woodside Energy engages in the exploration, evaluation, development, production, marketing, and sale of hydrocarbons in Asia, Pacific, Africa, the Americas, and Europe. They produce liquefied natural gas, pipeline gas, crude oil, condensate, natural gas, liquids, okay? Energy, oil and gas, okay? So these guys are a small player, right? 34.7 billion. So these guys are like an Occidental, that type of exploration company. Up 19%. With oil prices moving, see how when oil prices were fairly high, this stock was flourishing, and then oil prices were not good for 2 years, and you see where the stock's gone. This year, it's been moving. Now, geopolitically, I think there's some tension with Iran that could really get ugly. If it does, it's going to put some fear into the energy market. If it does, oil prices go up, then we're going to be seeing these oil stocks really flourish. That's what you're investing in here. Is if oil prices go up, Woodside's going to go up. Oil prices go down, it's going to go down. And if you saw, let's take a look at that. So this is WDS. And then we're going to look at Oxy. And then we'll compare one more. What's that? Oxy, what was that? EQNR. Oh. So you see how they're tracked. Well, that's the 1 day. So let's go 1 year. So Oxy's kind of dragging. Look at that. So WDS is outperforming both Oxy and Equinor. So you're picking a really good horse. Over the 6 month, Equinor is looking good. It looks good. It's just, fundamentally, we can look at the averages and we can arrive likely that, hey, you're buying at a good time because oil prices are not that high. So, and it looks like Woodside is outperforming Occidental. So maybe I should look at Woodside and switch from Occidental to Woodside. But that's where it lands. What do you think of Woodside, Daryl?
I'm going to add the price of WTI. On here just so we can look at it in comparison. Okay. So this was what I was interested in. I'm looking at a 5-year chart. It is at a 52-week high. But if I run up to highs that we've seen 3 other times before on this name, we have about a 15% upside. I don't know if I think this, no, that's not the right symbol. Let me get W. Maybe it has a dollar sign in front of it. Well, let me think of it. There's another fund that also does, yeah, let me get commodities. USO, I'll use that one. Okay, we'll use USO for now. Okay, so here's the price of oil. It's been pretty consistent since 2023. It did run up to 92 for a brief period of time, but it looks like the last 1, 2, 3, 4, 5 times it's peaked out, it's been around 82, and we're currently trading around 75. So if that's your thesis, here could be your highs. So you got about 17% of the upside. And then I want to look at just 1 year. This has tested the 200-day at least twice in the last 3 or 4 months. So in my opinion, you've got about a 14% downside. So looks like a little bit of the flip of the coin, in my opinion. It is trading above 21-day, 50-day, 200-day. That's all upward sloping. It's was overbought, coming out of overbought territory. It looks like it's heading towards a sell signal on the daily view. I think it's a flip of a coin, whether you're going to get a gain or a loss if you buy it at these prices. 200-day would be a good entry point. Even
all right,
the 50-day, I guess.
So we're coming up on my time limit. So we're going to get to LNTH, Uber, and app, and then call it a stream. Before we go there, I know Tony joined maybe after we talked about the beginning comments of what's causing the sell-off. I'm going to super summarize, which is AI is threatening some sectors and it's creating opportunities for others. Obviously, like the memory trade, and you see Applied Materials going up nicely today, so they're being helped by AI. But then On the flip side, software stocks have been getting hammered. We saw S&P Global threat there. So AI, the market's like, hey, let me take some risk off until we let this AI thing kind of sort itself out. And until that happens, we're going to see that type of sell-off. It's not like a giant surprise, high level, because the market was expensive going into this latest round of rotation, and looks like it's rotating, and it's going to make some stocks more attractive than others. So Lantheus Holdings, this one here is a discounted, historically when I've looked at it, it's been a discounted healthcare stock. They develop, manufacture, commercialize diagnostic and therapeutic products to assist clinicians in diagnosis and treatment of heart cancer and other diseases worldwide. Okay. Up year to date 5%. 1 year down. Looks like it's hit some lows. Its low point was around $50 a share, so it's up nicely from 50 to 70. It's a pretty good gain, but I think it's 5-year looks okay. The growth rate, wow, what happened to growth? What's going on? So it hit a contraction and then it started to grow again. The growth is concerning to me. Why is it not growing any faster? It's going to announce February 26th, so we're 2 weeks from that happening. The lack of growth concerns me on this one. You have a lot of high growth, or you have good growth and some high growth in healthcare. These guys, if they're hitting kind of a plateau, I'd be concerned. It is a discounted stock, but they're not that big. So for them to plateau is a concern. Okay. Forecast. 6 analysts cover them. They say there's a 11% discount, which isn't very high. And they're supposed to start growing again. So maybe the guidance is going to be, hey, we're going to start growing. We've got a new product coming. So that could make the stock work again. Maybe that's why it's rising. So that would be a story to monitor. The PE is really dropping. So it looks like its existing business is becoming really profitable. Okay. All right. Let me kick it over to you, Daryl.
Okay, they do have a resistance line coming up at about $75. I'm seeing the 50-day cross above the 200. That's referred to as a golden cross. The biggest issue is the 200-day is still declining. That hasn't reversed yet. The 50-day is increasing, and we do have the golden cross, so that's a good signal. We do have resistance here. We haven't gotten overbought, but we are sitting in an RSI of 66. We did get a sell signal, it looks like yesterday, on this name. So just keep in mind that it might face a little bit of resistance at this resistance line, just like it has been fighting the 200-day moving average since the 7th of January. It has finally broken above that line for the last 2, 3, 4 days. So that's a good signal. So accumulation is at a 52-week high as well, even though this is a small cap. Money flow is also bullish.
Okay. And just finishing off my valuation here. Okay, so Lantheus is discounted, but the lack of growth concerns me, and I think it's discounted by 33%, and the profitability is going to really expand. So it may create some really positive stories. And if it does have guidance where it's showing that, hey, we got these new products coming, it could create a really strong rally for the stock. So that would be worth keeping an eye on. I think the stock's at a good price level right now. You just need to do your homework on what's coming. If that growth that's going to come in a year and a half or so is real, I think this stock's going to work. That is LNTH. All right, let's stop by. Let's catch an Uber here. Uber's been under pressure. It announced on February 4th, and it's been selling off. And the story around Uber is you got robotaxi coming. And Uber did a fairly big kind of press tour. I mean, they were on every channel, and they talked about how they're trying, the way that I understand Uber is exactly what they're building, which is they're building the biggest network. They're not trying to build the coolest technology for robotaxi. And they're accomplishing that, and they're growing really nicely. And their intent is to offer up, and I'm going to give you an example of that. 20% growth top line, and they're a big company now. So their intent is, Waymo's not the only company doing robotaxi, nor is Tesla, nor is Amazon. There's like 10 to 20 companies that are well capitalized. Mercedes is going to come out with their robotaxi in collaboration with NVIDIA. So you got some big players. You got Nuro, which is a software company funded partially by Google Alphabet, and Nuro is going to partner with I forgot the company name. It's one of these new EV companies. So you have a lot of supply looking for demand. Uber can go to one of these platform providers and say, hey, you can put your cars on our network, and away we go. So 2 or 3 days ago, I think it was Tuesday, so it was Tuesday, I guess 3 days ago, I was in New York City, and I went by this restaurant that I like, and had a bite to eat. It was around the lunch hour, and I hailed an Uber. Okay, pick me up. And it says, all right, go to the corner, and you're going to talk to so-and-so, right? And I go there, and it's a cab. And I'm like, okay. He goes, you Victor? Yeah. Okay, cool. And I'm like, so you're a cab? Yeah. So the owner of that company has a fleet of cabs. And that owner of that company says, okay, I'm going to put that fleet on Uber. So then they can give Uber passengers a ride. That's exactly what Uber's trying to do with these robotaxi companies, which is you've invested the capital, you want a good return on your capital, you can put it on Uber. Uber wins because they don't have to invest the capital. It's going to be low capital intensive industry business, and they get to participate in the revenue and the profits of robotaxi. And I think it's going to work. So that's the story that's ailing the Uber stock. And I think the long-term success of Uber is going to be there. So those are my comments on Uber. It's discounted. I assure you that. But let's see what the charts are looking like. Go ahead, Daryl.
So this dotted line right here was green, but we've broken down below that and have sustained a breakdown below it. So I changed it to a red. So that immediately makes me start looking over here to see where we can find some support. And I'm just going to broad range it that it's probably anywhere from about 71, but we're already down at 69. And, it could get down as low as 60. So somewhere in here, I think we have support. Trying to find the exact, what I would consider as precise as I can judge is a little difficult. I do see a gap up right here that might be kind of nice around 64. So if I was looking for a precise value, that would be about as close as I would be, but I think this range is probably in play. So I'm gonna just leave this on here. We'll look at it again and see where it ends up landing. We are oversold. We've been on a sell condition since the 23rd of January. We have a 200-day that's been increasing that is now decreasing. That's usually never a good sign. So we've been on a decline since the 22nd of September, and the 200-day is now confirmation that yes, we are in a decline. The 50-day is declining. It crossed below the 200 at the beginning of the year. 21-day is declining, and it's been trading underneath its 5-day moving average for since the 16th of January.
Yeah, well, I think Uber is going to be a long-term play, and I think it's going to end up being a good winner for me. We'll see. We'll see how long it takes to get there. AppLovin has just been a wild ride. Look at that chart. Looks like a mountain range that has some peaks at 25,000 feet and some valleys way below that. And this stock has had moments of just incredible appreciation, but its revenues have been too volatile. It had contracting quarters, call it a year and a half ago, very fast growth, and then now we're seeing a deceleration of its revenue growth. That is potentially a concern, right? Where, hey, what's going on there? And I think the stock price is really behaving along those lines. Now, big picture, I was an owner of AppLovin, and I started to get out because I had too much in communication services. But the big picture is Google is probably a big place where advertisers are spending money, on YouTube or on search, as well as Meta with Facebook and Instagram and Threads, and now WhatsApp. And I think both of those guys are using AI to help their customers best spend their money on those platforms. And that could take away from AppLovin's business. So this one here is really volatile and I think could show a discount, but it is 90% discount according to analysts. I also have it discounted. But boy, this could be full of surprises going forward. It's supposed to grow nicely this year. And it could really, we could be sitting here 3 months from now and it's up 25% to 35%, or it could be down 25%. I'm not sure which one it's going to be, but I decided to move it off my portfolio. Started that move maybe a month and a half ago because I just have too much in communication services, and I'm just going to go with Meta, Google, and Reddit for the time being. What do you think of AppLovin?
Yeah, I've been cautioning on this one for a while. So I'm going to have to turn these green lines into red lines because it has broken 2 more levels of support in a sustained fashion. So those will be turned to red. This one we had a bearish negative divergence and it finally kicked in, and we're down 50% since then. We've had a sell signal since the 29th of December. We are been slowly moving into a little bit of distribution, but it's kicking in a little more heavily here. The money flow is bearish and looks to be getting stronger. So, yeah, I've been warning on this one for a while.
It's been a wild one. All right, everybody. That is the end of the show. We covered a lot of stocks. Geez. Looks like we covered about 13 stocks. And it looks like the market is going to continue to rotate out of some stocks. NVIDIA's selling off today. But there's a lot of like green over here. So we'll see where we go today. Salesforce is catching a nice little bid. Applied Materials caught a nice bid. Arista. So if you're a member, check out these 2 videos I produced. I went in depth on those. And I did get a chance to look at Airbnb and Instacart. So I'll create videos on those, probably coming out tomorrow. So if you're a member, look for those and I'll share my analysis on those videos. So what's going on with your channel today, Daryl? Or this week and next week?
Let's see here. Let me share my screen. So a couple interesting things about the earnings so far. I know I've mentioned this in other streams. The companies that I have actually reported earnings that are 17% higher. The market overall has only been 7% higher. And yet the initial price action, only 35% of these are higher. That's somewhat fascinating. I don't have enough information on the 1 week later. That'll be probably a week from now. I'll have this column filled in and we'll see how they reacted 1 week later. But this is somewhat interesting. Just companies have not been rewarded this quarter for beating, and companies that I have beat by almost 2x. Let's go to the next slide. So I put out a whole bunch of shorts this week on the companies that reported this week. These are the ones that will be reporting next week. So I'll let you know what the trend is. I'll calculate the implied moves. I'll gather up the short interest and I'll put that in shorts for next week. Those are 1 minute long and they give you pretty good information about how a company is performing as they move into earnings.
Great. Thanks, Daryl. Nice work today. And Monday, we do not have any trading. It is President's Day. So enjoy a nice 3-day weekend. And hopefully your stocks are on the rise today. There are some green stocks out there and they look pretty interesting. I'm going to keep analyzing over the weekend and releasing videos. With that, everybody have a good day. Good luck with your trades. And we will talk with you next week, probably on Wednesday. We will resume our streams. And until then, good luck. Thanks, everyone.
Take care, everyone.